Good afternoon, everybody. Welcome to today's live stream of the revelation, the revealing of the US inflation data. Important day today. It's going to kind of show us the way how the Fed is going to act in January. On the January 31st, we have already the next FOMC meeting where the Fed is going to decide whether or not to keep interest rates stable, or maybe like some people out there are suspecting already, maybe even lower interest rates. So for that, we are going to have a look today. In around about 18 minutes, the inflation data is going to be published. We want to see also after, of course, after the news are out, that we can maybe do some day trading. I'm going to use here my news trading strategy, which I also did a video about already. But I'm going to shortly, before actually the data is revealed, I'm going to tell you guys a little bit more about the strategy. If you're watching this live currently, also, of course, feel free to answer your question. If you're watching this maybe as a live stream on Twitter, or you're watching the recording of this later on, you can also leave your question underneath in the comments underneath the video. I'm going to answer every single question there, and don't worry, there is no such thing as stupid questions. So let's have a look quickly what to expect today, and then I'm going to walk you through the markets and the ones that I potentially want to trade also today. It's all going to depend, of course, a little bit on how the data comes out, if there are surprises to the upside, if there are surprises to the downside. So let's see how that is. If you haven't done so already, I would appreciate also if you want to leave me a like and subscribe to the channel. I publish new videos about trading and investing from the eyes of a professional trader. I've been doing this for 25 years already, every week. And yeah, let's start a little bit here with Bitcoin. Bitcoin spot ETF was approved yesterday, and I think to the surprise of many people out there, we didn't see that much volatility. So we saw, of course, a large swing to the upside. Actually, the swing to the upside we saw more on the day before, which was a fake out, because for what reason ever, the SEC Twitter account was hacked, and this was published before it actually came out, before it was official. So weird story. Yesterday it was official. So this afternoon, in about an hour from now, we are going to have the ETFs also trading. It's going to be interesting how the market is going to react to this. Maybe we're going to see some movement also already today from Bitcoin when the inflation data comes out. All right, so let's have a look at the inflation data. Let me just quickly access TradingView for this. So you can find here on TradingView under economic calendar always that's why I always click on this high importance, because I'm obviously only interested in high importance data. You can see inflation coming out here in about 14 minutes. The important thing that we want to have an eye on are actually only 2 out of these 4 readings that are going to be published. First one is the inflation rate YOY, which means year over year. So the inflation rate December 2023, that is, to December 2022. The forecast is here that inflation is 3.2%. Last reading November was at 3.1%. And we especially also want to have an eye on the so-called core inflation, because this core inflation is what is always very important for the central bank. So they are having more an eye on this core inflation and not on the general inflation data. This one is forecasted to be down by 3.8, to be only up by, 3.8% down. This is what I meant from 4% in the prior month. And should this data come in better than expected, so you want to have a look here at core inflation, better than 3.8%, and the general inflation rate better than 3.2%, then we potentially could see a very positive move on the market. That would potentially mean Bitcoin up for sure. We don't know yet how much this is going to be influenced today by the ETF trading. For sure, you would see here in the S&P 500 a spike up, and here in the S&P 500, in my opinion, we are at a quite interesting level. We have the resistance here, which should be a little bit lower here at 4,800 points. Actually, here we go. Let me just put it there directly at 4,800. Here we go. We bounced off this one really by almost the point not so long ago here, end of December. Beginning of January, we saw a little bit declining prices. Then now we're fighting for this. So a positive reading could actually lead us up to the north. And the S&P 500 would be for sure an instrument then I would like to concentrate on trading. I don't know if you can see this actually very well. I'm just going to maybe highlight this more for you. You can see like a line up here, and you can see a line down here. This is our average true range, and this is going to become later important when the data is revealed, because if it's really positive, what we want to do then is we want to see if the S&P 500 can break out of this average true range to the north, so over 4,831. Make a top here, come back, and then we want to work here with a limit order. But in order for this to happen, we need really the positive breakout based on positive numbers. Now, if you do not really know what I'm talking about here, I actually did a video on this news trading strategy where I use this average true range indicator to determine where to enter and where to exit the market. So you might want to browse a little bit on my channel and have a look at this one. It's pretty easy, it's pretty straightforward. I think good invested, I think it's like 9 or 10 minutes long, the video, a good investment of your time, in my opinion. Good, we still have about 11 minutes to go. The second instrument I want to have a closer eye on here today is for sure euro dollar. And here we have the average true range up here at 110.30 at the moment, and down here at 109.18 roundabout. And funny enough, again, euro dollar is so attracted by this 50% Fibonacci retracement. So that's the 50% retracement from all this move that we had throughout 2021 and large parts also of 2022. We bottomed here in October 2022 at about 0.95 US dollars per euro. So that was this phase really where the stock markets went down, where we saw the cryptocurrency markets go into the bear market. And in phases like this, which are called risk-off phases, you typically also see the US dollar becoming stronger, thus euro dollar going down. Why is that going down? Makes the US dollar stronger because it's US dollar per euro, the measurement here. So you had to pay less and less US dollar per euro, meaning the US dollars go stronger. And now since then, we've seen euro dollar rebounding, and it kind of always goes here to this 50% retracement and kind of lingers around there. So this is going to be quite interesting. If we see a good number there, we probably would see also a leg up here in euro dollar, the US dollar going weaker then. So I would get ready here somewhere around 10.30, 10.31 to potentially see, can the market break out over this? So that can the market do something like this, then come back, and then I would be ready around this area to buy euro dollar actually. But let's see it, not said, and that's the nice thing also about this trading strategy. You don't need to guess how the news are going to be. That's never a good idea, guessing how the news is going to be. It's going to probably lose you money. Maybe you're right 1 time, 2 times, 3 times. But in the long run, usually this is a tactic where you end up losing money. And of course, we don't want to end up losing money. If possible, we want to earn some money. So we have to stay patient, see how the number is. Is it really much more positive than expected? Is the market reacting positive? Then we want to see the breakout over the upper average true range in the euro dollar in the S&P 500. See if the market then reverses down, because this average true range is going to act like a support. And if that really happens, then we want to enter the market here. Of course, vice versa, this could also be to the downside, saying if we see a worse number than expected, so something maybe around 4.1% in core inflation or 3.4 or 3.5% inflation, that for sure would be very, very bad for the markets, meaning we would see for sure then the S&P 500, wrong chart here. This one I wanted to actually to show you. We would for sure see the S&P 500 attacking this average true range down here. Meaning that we would do it vice versa. We would see, does it break through? Does it pull back then and then enter here a short? If we get somewhat neutral data, we either don't do anything. If we, based on neutral data, which is very rare, actually see a reaction where either the S&P 500 or the euro dollar goes to the upper average true range or the lower average true range, we could treat them as a resistance or support and see if the market reverses well. This one is a little bit more risky. So if we see that, I would not risk here so much money on a trade like this. So 7 minutes to go. Very quickly, how is the overlying, these are the bull market support bands. Actually did a video on this one in the beginning of this week, there's a very nice trading strategy on the weekly Bitcoin US dollar chart where you can use the bull market support bands. Also check out that video after we are done today. I think it's really worth your time. And you basically just need to spend 5 minutes every day to look at the charts and then determine what you want to do. So we have also here, sorry, let me quickly look here at my phone. Was somebody trying to reach me? No. I thought I heard the doorbell. So the underlying thesis that I'm working with here is still that in 2024, that was between September and December 2024, I changed back to being from US dollar cash to buying cryptocurrencies, to buying US dollar stocks again, when inflation started ticking down for the first time. Because in the past, these also usually have been the moments where then the stock markets had its low. So if you check it out here, it was the case, and this, so that was in October 2022. It was the case here back in the early 90s, 80s, mid 70s, and beginning of 70s. So it doesn't really matter how far you go back here. And whenever inflation was above 6%, came then ticking down. That usually was the low of a stock market. So it does not mean that the road ahead cannot be bumpy. I mean, you just need to look at this. There are always ups and downs in the stock markets. Obviously, we could see something like this. So don't be angry if, for example, the S&P 500 goes from, let's say, 4,800 to 4,400 points again, 8 to 10% down. It's completely normal, but long term, we should probably see a good year. And we should especially see a good year if today's inflation rate reading is better than expected, because that would lead to this picture here potentially changing a little bit. So this is the so-called CME Group Fed Watch tool. And they are kind of determining here the possibility of whether or not the Fed is going to raise interest rates during the next meeting, lower interest rates, or keeping them stable. And at the moment, for the 31st of January, we have 97.5% of market participants expecting that interest rates stay stable. If you go a little bit forward here, so after this, the next, meeting is going to be in March. There we already have 68% of market participants expecting that the interest rates will be cut down. And here in May, we already have 59.9% at the moment expecting that they will go below 5% again. Now, my opinion here is actually that we are going to see the first interest rate cut in May, end of May, 31st of May. And this is beautiful because this is going to coincidence, or this is going to be at the almost exact same time like the Bitcoin halving, which is going to be late of April, probably by the looks of it. So in round about, what is that, 60 days now, I think. February, 90 days still, roundabout, or 75 days. And that, of course, would be beautiful, yeah? Falling interest rates, which should fuel a little bit the markets to go into risky assets again, such as stocks and cryptocurrencies, plus the Bitcoin halving, which is going to cut the supply again in half by Bitcoin every 10 minutes for finding a new block from 6.25 Bitcoin to 3.125 Bitcoin. So that would be beautiful. All right, we still have 3 minutes to go now. I see a hand of full of people actually watching today. Like inflation data always coming out a little bit at an odd time. Yeah, in the States it's still in the morning. Here in Europe, yeah, people still at work. Nonetheless, it's really, really important, this data. So let me quickly switch here already to my calendar. I'm going to switch here also. Let's maybe go to 15-minute charts. Do we see here possibly even 5-minute charts? Okay, let me get the auto fitting here. Okay, that's not so good. Go back to the daily here and auto fit again. Here we go. Because I want to, of course, observe here the true range on the upside, the true range on the downside. As I said, we are going to do this for the S&P 500 today and for euro dollar. So now we have around about 2 minutes left still. I'm going to be a little bit quiet and prepare. And then let's see if we can find maybe a trade entry. If the numbers deviate very, very much from the forecast, we're going to see a crazy high amount of volatility. I'm, of course, kind of hoping for a good reading here. This is something the market really would like here at the moment, but we never know. So under 1 minute now, only to wait. "30 seconds to go." The tension is rising. If you're watching this live, leave me a comment maybe if you're trading this or not trading this, and what your opinion about the interest rate environment is. "10 seconds." 5, 4, 3, 2, 1. Let's go. Waiting here. We see the first reaction a bit to the downside. Oh, wow. Yeah, we have the inflation reading here at 3.4%. Expected 3.2%. So that's actually much worse than expected. Core inflation also came in at 3.9%. Expectation here was 3.8%. So that's a bit of a surprise to the downside. So I think that will rule out interest rate cuts in the beginning or end of January during the next meeting. The question now, of course, is how are the markets going to deal with this? Not much of a reaction here from euro dollar as well. If you look at the 5-minute chart, let's also get the rate ready here. So this is where our lower average true range is. So the trade actually would be now for euro dollar here to see if euro dollar can break below 109.27, that is about, and then rebound to 109.27, where we want to have a short limit order ready. Let's see. Very often also what we see, of course, is that the first reaction of the market is kind of the wrong one. And I think the market doesn't really know at the moment very much what to make out of these numbers. Not much of a reaction, in my opinion. It's kind of surprising. I would have thought here that the reaction to the downside would have been more massive. Average true ranges here, of course, are quite far away because we had a bit of volatility on the market. Now the candle getting a little bit... here we go. just wanted to adjust this, but still we need to wait here patiently. We don't want to jump onto the wagon, so to say. We want to make sure that we wait until really there is something for us to trade. I want to do it like this, and then I want to make it yellow so it's a bit nicer to see. Same here on the downside. S&P 500 now coming a little bit closer, but still 10 points away. Let's switch back to euro dollar. And also here, want to go with a horizontal line. The only thing I don't like about this average true range indicator is that it's not so easy to see on the chart. Euro dollar a little bit rebounding here actually. S&P 500 now also rebounding a bit. That's quite surprising. The true range is moving a little bit closer now also, which is okay, that is normal. But nothing really here to trade immediately, guys. We have to wait now. I don't want to wait too long now. If we hit the upper or lower, in this case probably more likely the lower average true range, let's say in 15 minutes or 20 minutes, it doesn't really make a lot of sense then to jump on the wagon. So this news trading strategy is obviously to react kind of to the first momentum of the market. We can see now we move it a little bit lower again. Euro dollar, it's not that much. So it seems actually that the market still is staying a little bit optimistic, which is not a bad thing. Don't get me wrong. The largest back I still have, of course, is long stocks, long Bitcoin, long cryptocurrency anyway, so everything okay. But you see, this is the benefit really of this news trading strategy, also with this average true ranges, that you do not need to jump with a guess into the market. You want to wait until the action really happens. Because, I mean, look at this. How do you want to trade a candle like this if you are scalping the market? In my opinion, that's almost impossible. Switch back here quickly to the S&P 500, kind of the same picture. So you can see the candles also almost the same here, of course, in euro dollar and the S&P 500. They are reacting both into the same direction. Strong dollar, weak stocks. Typical risk off move, but not much. I mean, we see we open the candle here at 109.87. Now we are like about, what is the 20 points lower? This is not a huge reaction. S&P 500 moved actually a little bit more, but also it looks like bottoming out here. So yeah, if we don't see now within the next 5 minutes more volatility coming up, then I think it's safe to say that there's nothing to trade for us with this news trading strategy. And we're going to wait then for the next important news coming out, which by the looks of it is going to be the interest rate decision. Let's quickly see if something has changed here in the FedWatch tool. Yeah, still the same. Most people believing. S moved a little bit. I forgot how much was it earlier. No, I think it has stayed the same pretty much. 95% still convinced that the Fed is not going to do anything regarding the interest rates. And it very much fits also into the narrative that the chairman of the Fed, Jerome Powell, has been telling us for quite a while now, which was they're going to keep the interest rate higher for a longer time. That's also the reasoning why I said we're probably looking at a March, in my opinion, more likely May, to see the interest rates coming down for the first time. I mean, inflation rate really today surprisingly high. I think that was probably a bit unexpected for most traders, including me here. 3.4% versus 3.1% that we had last month. And core inflation at 3.9% versus the 4% we had last month. However, here we had an expectation of 3.8% for the normal inflation, 3.2%. So that was a bit of a nasty surprise. Nonetheless, the markets are reacting not bad to this. So maybe the reading was not bad enough. All right, that's it for today already. Nothing really to do. So there is no need in holding you captive here on the stream for a longer time. If you have been watching this until now, please remember to leave a like and subscribe to the channel. I do everything here totally for free. I don't use affiliate links and so on and so forth. So you get what you see, and I'm not trying to sell you anything. So yeah, until we see each other next time, everybody, remember to always use the stop loss, and happy trading.